it's your perfect guest to have on for today. Let's just take the other side for a second. What if it's true? Let's take the money, let's bring it back to Congress, and let's reallocate it, say, for small business, PPP.
Yeah, well, good morning, and thank you for having me on. There's a couple of problems with that. First of all, this is a backstop, right? The whole point of these programs was to be available in case things get bad again. And as we're seeing this tsunami of virus sweeping across the country and the shutdowns that are following it, this is exactly the worst time imaginable to pull the plug on these programs, which were so important to contributing to stability across the country. Second, the idea that this money is going to be repurposed for small business is utter nonsense. The bottom line is that's going to require an act from Congress, and we have gridlock right now in Washington. And it's not as if, there's a pile of $450 billion sitting in the Treasury vault that's now going to get moved from one thing to another, that this money could be repurposed with anything short of an act of Congress. And third, the money isn't literally slated to be lost. There's no budget impact on it. So if Congress wants to help small businesses, getting this money back or not makes absolutely no difference from a fiscal standpoint. So it's just a pretty bad justification for what is a pretty nakedly political move designed to undermine the incoming Biden administration.
Neil, good morning. The markets have barely budged. There was a brief ripple in the equity market, but credit's hardly moved. Are you surprised?
Not entirely. I mean, I think that you got to understand, again, where this is going to really come into play is when things start tightening again, when the ramifications of the shutdowns start to continuing again. This alone wouldn't necessarily trigger that type of panic. It's going to be something external, something that we maybe don't even know what's there. And that's why it's important to have these programs as a backstop, right? They're important to be there in case something bad happens, in case panic returns like it did back in March, and these programs were so helpful in smoothing things over. And it also really takes away the opportunity for the new administration to use these programs a little bit more proactively than Mnuchin did. Mnuchin decided that he was going to take an almost zero-risk approach, and that resulted in very strict terms that really dampened the effectiveness of the lending to medium-sized businesses in the Main Street program, the lending to municipalities, and you're sort of taking away a potential tool that could be stimulative as well as a backstop. So it doesn't surprise me that it hasn't yet hit the markets as far as changing prices and spreads, but that's because we don't have that maybe additional external shock that can trigger the system into panic, and now you remove the brakes on this. That's the problem. And I think the other thing to keep in mind is that this isn't necessarily a done deal. The Federal Reserve has to agree to give the money back, and I don't think they've indicated yet that they will do so.
No, in fact, you have Fed officials coming out and being like, we don't like this plan, basically. Let me walk it forward then. So let's pretend like they do have to give the money back. The narrative has been that the actual money didn't need to be used. It was a psychological boost and comfort for the market. So if you walk me forward to like January 20th, does the money actually have to be there, or can President-elect or then President Biden just say, this is what we're doing, the Treasury Secretary says this is how much, this is what we're doing, and that's enough to kind of help us through?
Well, the problem is that if the Federal Reserve responds to Mnuchin's request and gives the money back, that money will no longer be there to seed these programs. And there needs to be some money from Treasury in order to absorb any potential losses that might come from these lending programs, because the Federal Reserve itself doesn't feel like it could be in a position to take its own losses. And because these are non-traditional Fed activities, I mean, these are lending to private companies, and there's always a risk a private company isn't going to pay the money back. There needs to be that taxpayer money as a buffer. And this goes, this is the formula they figured out back in 2008, 2009 during TARP that was replicated here. And so it would be this, if the Fed gives the money back, it's going to be very, very hard, much more difficult for a Biden administration to restart these programs. Not impossible, because there's some other smaller amounts of money available in other funds, but nothing that comes close to the size and scale of what was previously announced.
Neil, does the U.S. economy have a liquidity problem? Do the U.S. markets have a liquidity problem? Because as far as I can tell, there is liquidity everywhere. And you can see that in spreads. You can see that in what is happening with the equity markets. Why do we need more liquidity? Why do we need this backstop when the system just has so much of it right now?
You know, you might have said the same thing in February of 2020, right? I mean, the thing that we've learned from crisis after crisis is that there's a ton of liquidity until there isn't. And that can happen very quickly, very rapidly when markets start losing confidence. And we're just a shutdown order away from triggering that same level of panic, that same level of loss of confidence where the liquidity dries up very quickly, and that's when you need a backstop. And that's sort of the thing here. It doesn't cost anything to keep these programs in place, you know, as an insurance policy, which is why you've seen something I don't remember ever seeing, the extraordinary actions by the Federal Reserve to swiftly rebuke the Treasury Secretary and say, this is a bad idea. You guys cover this more than I do. I can't recall ever this type of open split between the Treasury and the Federal Reserve because it's so extraordinary. I mean, again, the idea is there's no harm in keeping these backstops in place just in case, because we're not out of the woods. You can't when you have this virus spiking across the country.
Hey, Neil, final question. Based on this, who should be Treasury Secretary in a Biden administration?
Not Steve Mnuchin. I can tell you that with over 100%. There's a lot of great candidates out there. It sounded like Biden's cryptic statement points towards Janet Yellen, who I think would be an excellent choice. And there's a number of other names out there who could potentially be terrific. But I think we're certainly looking for a significant upgrade. I don't think any of those names would ever do such a nakedly political act as what just happened and put the interests of the American people so far below this sort of very petty, small, motivated issue just to hurt the successor to Donald Trump. And so I think we're in for a big upgrade.